What's up, everyone? It's Karthik with MoneyVest, and markets here very flat on the day. There was some selling pressure on, of course, Tesla, Meta, Google. The Nasdaq also was down a little bit over 10 basis points. So was the S&P 500. And tomorrow we've also got the personal consumption expenditure numbers coming out. That's the PCE. That's the Fed's preferred measure of inflation. And speaking of inflation, I have already done a couple videos on this topic already, talking about the monetary policy and what really happened during the Fed meeting. Why did the market sell off so aggressively? Why did the volatility spike 74% in one single day? So definitely do check out those videos. But right now, with the way markets are, I am getting a little bit more concerned that we may see more potential downside here, because the market narrative has really changed over the last 24 to 48 hours. And even technically, we're coming down to some very important levels of support. And if you do end up breaking down, which I'll go over in this video, there may be more downside in the future. And that's a good thing, because that's actually only going to create buying opportunities for us. When the VIX was high, at 73, 74%, when it rallied up to over 27, I think it was trading, after hours yesterday. Of course, I sent out some buy orders. And if it continues to sell off further, well, guess what? That's going to create more buying opportunities, higher quality buying opportunities for all of us. So this right here was the state of the market. The Dow Jones was slightly up. S&P 500, Nasdaq very flat on the day. So not really a lot of momentum for those two. We got the small caps IWM down again 62 basis points after the bloodbath yesterday. And we got the S&P 500. It was actually down a little bit more than 26%. But the fact that it's only down 12.7 after being up over 73% just goes to show that there is elevated levels of fear in the market. So we actually ended up closing at just over 24. If you come over to the charts here, you'll notice that we're just a little bit over 24, and the green candle is very suggestive of the higher levels of volatility in the market. So what used to be a little bit of a previous resistance, I should say. So this right here in the last, several months in 2024, where the WIX has previously gotten rejected, is now starting to become a very good floor for volatility. So that just again goes to show that there is elevated levels of fear in the market. And what happens when there's elevated levels of fear in the market? The market starts to make this downtrend of lower highs and lower lows. Because I'll give you a very simple example on volatility. Just take a look at the range within which it's trading here, right? So if you take a look at the range where the S&P 500's volatility, which is, in other words, the VIX, is trading here, versus if you fast forward to where it was trading right here. It's a very simple, very simple comparison, right? There's not really much to it. But if you take a look at the floor and the ceiling of volatility here, it's much higher than here. And of these two, which was a bear market and which was a bull market? It's very simple. This right here was a bear market. It's 2022. And this right here was the bull market. It's 2024. So this right here is what we try to understand and assess where volatility is, at what levels is it finding support, and is there going to be some elevated levels of fear in the market creating that potential for lower highs and lower lows? In other words, a change of direction in the S&P 500. And well, guess what? Right now, I'm starting to get a little bit concerned, because like I said, if you fast forward to now, we're starting to find a little bit of this higher support or elevation in volatility, that it's staying in the mid-20s. When staying in the mid-20s becomes a very normal occurrence, it's a very normal day for volatility, you better believe it that there is elevated levels of fear in the market. And of course, if you combine that with the charts like these, where S&P 500 is coming down to that support, and again, we saw a lot of selling pressure intraday, because this right here is going to be that intraday chart. And you'll notice that we saw nothing but selling pressure even today. So this right here was Wednesday. This right here was pretty much Thursday, December 19th. And we saw lower highs and lower lows, and pretty much closing in at the low of yesterday. So if we close at the low of yesterday, same thing with the Nasdaq. In fact, I'm going to go over to IXIC here. Same exact chart. You can see the sell-off from yesterday, sell-off from today, lower highs and lower lows, and closing in at the lower level of yesterday's sell-off. So that just goes to show there's a lot of intraday weakness. Volatility, there was a lot of intraday momentum back up. there's elevation in volatility, so that means it's actually trading at higher levels, and that's going to lead to potential, more fear or potentially more sell-offs in the market. So that's something that I need to prepare you guys that just because volatility spikes 73% and we put in some buy orders, volatility is going to get crushed, we're going to get rebounded back up, and everything's fine and normal. Not yet. Not yet. I mean, this is a market that is now starting to change a little bit of that narrative when it comes to the technicals as well as the macro narrative related to inflation and interest rates. And so if you do get a breakdown below this, that would be the first lower low the S&P 500 would print, because this right here is a support right about there. That's exactly where the market's trading right now. And if tomorrow or next week we see a breakdown below this level, then we're most likely going to be making a lower low here. And that could be the start of a potential change in direction for the market. And same thing is true for NASDAQ here. As you can see, that we're already trading down with that support. And that was a previous resistance and perfect validation. I mean, this is about as perfect as it gets, that we're just right at that higher low and that horizontal support. So it's going to be a very, very critical day tomorrow. And of course the day after, because not only do we have the inflation numbers, but technically it's really going to dictate, are we going to see a longer lasting sell-off, or is this going to get bought up here fairly soon? So be prepared for tomorrow, because technicals are going to be very important for the market. If you do get a breakdown here, the Nasdaq's 18,670 is very much a possibility, and that's from an all-time high perspective is going to be down just over 7.5%, which again is a very, very reasonable pullback for the market. Now, Tom Lee has a very different approach. He's saying back up the truck after Wednesday's panic selling. As we know, that Tom Lee is one of the most bullish analysts out there, and he's been more right than wrong, because the markets have gone up more than they've gone down, right? So it's a very simple understanding of why, if you're constantly bullish, why you're going to come out on top eventually, because markets have almost always, there's a higher likelihood that we actually see all-time highs than we do see bear markets. But that being said, again, his expectations are the first 6 months of 2025 are actually going to be very strong versus the back half of 2025. Now, if you guys remember correctly, going into 2024, it was the exact opposite that a lot of people were talking about. They were essentially saying that the first half of 2024 was going to be really bad, and then the second half of 2024 is where the growth and the returns and the progress are going to be. And what did we see? We see the exact opposite. 2024, the first half was actually really good, and then the second half, there was some turbulence in September, some turbulence in August, and then now we're seeing a little bit of that turbulence in the market as well. But all in all, it was actually a better first half. And then, of course, the second half was a little bit back and forth. I mean, November was still the best month of 2024. But that being said, we still have gone through August and September, and now we're going through December. So there has been a little bit some rough waters in the market. So it's possible the first half of 24 actually ends up being brutal, and maybe the second half of 25 actually ends up being better. So again, we'll find out. But Tom Lee here is still suggesting for backing up the truck and buying a lot. I did buy a little bit, but backing up the truck and just filling it up with just as many stocks as I can buy, I don't know about that. I'm just going to be a little bit more cautious here. Now, when it comes to personal consumption expenditure and core PCE, all these numbers are scheduled to come out tomorrow at 8:30 a.m. Eastern. That's going to be the Fed's preferred measure of inflation. Super important numbers. 0.2% month over month is the consensus, 2.5 on a year-over-year basis, and core 0.2% and year-over-year 2.9. And you can see that they're both accelerating from the previous number, 2.3 to 2.5. That certainly is not good. And then core from 2.8 to 2.9. And that's exactly what the markets are really concerned about. That's exactly the whole concern behind markets sell-off, is inflation really moving up? Is inflation really reaccelerating back to the upside, where it's going to be sticky and it's going to be higher? If that's the case, well, then guess what? The Federal Reserve has no other choice but to essentially give up or let go of their rate cutting monetary policy, and then really pivot back to potentially keeping rates where they are, or worse, increasing them to try to bring inflation back down. And that's exactly what was highlighted in my yesterday's video, going over Jerome Powell, the FOMC, and some of the mistakes that, in my opinion, they ended up making. They were very reactive on the way up, and they were very proactive on the way down, meaning that they were too late on the way up and then too early on the way down. They didn't really need to cut as much as they did in 2024, because nothing was really broken. There was nothing to fix by cutting rates. There was no incentive, for them to use that tool at their disposal to try to fix something, because there was nothing to fix. 100 basis points worth of cuts was, in my opinion, a little too much. And that's what's really causing the market to kind of reevaluate where inflation is going to go. And, tomorrow, the Fed's preferred measure of inflation, we'll find out exactly what that's going to look like. But the market sure is pricing in for a little bit of an increase. GDP numbers came out earlier. So we did see a 3.1% increase on a quarter-over-quarter basis. And the annual rate for PCE came in at 3.7%. Consensus was 3.5. So once again, coming in a little bit hotter than what the expectations were. Jobless claims, we came in at 220,000. Consensus was 230,000. And this right here is what the markets are pricing in for now. When it comes to rate cuts, only one rate cut is priced in for 2025. And I wouldn't be surprised if even that rate cut gets completely diminished from this expectation. And, we're down to like zero rate cuts in 2025. I also have my shopping list. Again, if you want to get access to all of this, links are going to be down below. So if you come over to our MoneyVest platform, you get access to pretty much the entire website, as well as my shopping list, which is going to be right there. It's a list of 29 high quality stocks that I believe have the most potential upside, with my buy targets also included. So links are going to be down below if you want to join and be a part of our MoneyVest community. There's also a 16% annual discount if you decide to pay annually, and that will get you 2 free months. And of course, that gets you to access our portfolios, weekly updates, trade alerts, website, Discord access. Everything is going to be included with the link down below. So again, if you have any questions whatsoever, definitely do check out the links down below. And I also want to go over my portfolio. So basically wanted to give you a little bit of an update. Pretty much everyone, I gave an update on our Discord earlier, talking about as we close out the year in 2024. I just wanted to give an overview of all the stocks traded this year, profits and losses, and my existing positions and percentage allocations. My long-term portfolio has really consolidated this year to only accommodate 8 positions. And I may broaden out to 10 stocks in 2025, right? So just space for 2 more high quality names that I'm looking to add in 2025. And since I traded a lot of stocks, these are the profits and losses for the market. And again, we're going to be doing a private member live stream in 2024, like towards the end of this year, to plan 2025. It's going to be a live stream where everyone shares their highest conviction stock for next year, strategies and sectors and themes for us to focus on collectively as a community. I think it's a good way to really brainstorm a lot of ideas from very like-minded individuals. We're all traders, investors. We're, watching the markets, trading the markets every day. So I think it makes sense to bring everyone together, with a notepad and really write down some stocks and some ideas that we can look into going into next year, so we can have another really successful year moving forward. So profits realized, I had ASML, AMD, Google, Microsoft, Nvidia, IWM, VIM, Enphase, Apple, TMF, FNGU, and Realty Income Corp. So those are all the profits realized with their percentages. Losses realized, I did sell Walgreens, Neo, and Truly for a heavy loss, 50%, 80%, and 70%. But a lot of these profits have already made up more than enough for the losses that I incurred for these companies. And whatever capital I was able to free up, I did put it into like Tesla and Palantir and SoFi, like VUG, like a lot of these ETFs and index funds that have done really well. So these are my existing positions with the percentage allocation. PayPal, 3.5%. Tesla has really grown into a bigger position. Once again, we got VUG, SMH, Palantir, SoFi, iBit, and Amazon. And then the options portfolio certainly has Nvidia, Tesla as actual share positions, as well as my covered calls and the SOXL cash secured puts that I've also sold. Year-to-date returns for the 3 portfolios that I'm running, one is going to be a 31% gain, the other one's 82.7%. That, of course, has Tesla in it. And then the options portfolio is up over 27.6% so far year-to-date. So all in all, this has been a pretty strong year, but where and how we close is still up to debate, because in the month of December, S&P 500 actually is down. So if you come over to SPX, yes, so we're down quite a bit. We're down about 2.7% for the month of December for S&P, and the Nasdaq is still managed to be green right now, at least so far. It's up over 80 basis points, but we'll see what happens over the course of this month of December. We still have about 10 trading days left for December. So coming over to volatility, we already discussed. Bitcoin's also been selling off, so it's back down to 96,000. And if you take a look at the market breadth, it's absolutely getting crushed. We've got less than 8% of stocks trading above their 20-day moving average. And again, 19.5% stocks trading above their 50-day moving average, and just a little bit over 50% of stocks trading above their 200-day moving average. So this has certainly been a lot of selling pressure for the market. And if you come over to the concentration, today was just about a $40 billion inflow. Some of the biggest losers were Broadcom, Tesla again, Micron, Vertex Pharmaceutical definitely selling off quite a bit, was down a little bit over 11% after I think their pain medication saw some really poor results. We got UNH, Cintas, Home Depot, all these stocks selling off. We got Nvidia, Amazon, Apple seeing some inflows, and then of course Visa, Oracle, JP Morgan. If you come over to market snapshots, it was a little bit more mixed day. You can see greens and you can see a lot of reds as well, but almost every stock out here is either in a pullback, correction, or a bear market, with Amazon, Apple, Netflix, the only three that are still well within a dip at the moment. The Dow Jones is in a pullback, the Nasdaq's in a dip, and the S&P 500 is also in a dip. But another 1.5% sell-off, and I think they'll both be in a pullback, down over 5% from their all-time highs. So coming over to, and this is the Money Vest Index, as we discussed, 2.79 is where we ended up at. Right now, after today, we're back up to 2.9, but still in the uncertainty right now, and a trigger that we haven't seen in a really long time since October 2023. So again, the risk-reward profile has really shifted for the market in just a matter of 2 days. I mean, that's what happens, right? Staircases up, elevators down. That's what ends up happening with the market. The 10-year treasuries are also causing a lot of problems. We're back up to 4.5.5%. And the higher the 10-year treasury goes, the more problematic it's going to be for tech stocks and for the markets in general, because every investment opportunity is going to be compared against where the 10-year treasuries are trading. I mean, that's what I do. Like, even if I'm, let's say, investing in real estate, I'm really trying to dissect what's going to be my real post-inflation net cash on cash post-tax return. That's what I'm trying to really understand. And if that number is not able to beat the spread between the 10-year treasuries and inflation, then there's no point of me putting in all this work, taking on all this headache of putting in tenants, screening tenants, and buying property, then where I can simply get 4.5% here, right? So it's definitely something that investors care about, right? So every investment opportunity is always going to be compared against the safest risk-free bet, and that is, in this case, the 10-year treasuries. Globally, that's what investors care a lot about. So coming back over to the markets, I've already gone over the technical analysis on here. Let's just quickly go over to Apple. We did see some buyers stepping in. Inside this green rectangle is where the very strong support is going to be. I've actually been sharing a lot of technical analysis on our Discord as well, so you can pretty much access that over there. So if you come over to technical analysis, technical charts, I did share a lot of charts here for AMD, for IWM, for Tesla, IXIC. We got the S&P 500, Palantir, we got SoFi, we got MSTR. So you can definitely check out the TA over on that channel as well if you are part of our Discord. Amazon, on the other hand, 216 is going to be that level to watch. SoFi selling off. We got a support sitting roughly at $14.87, a little bit under $15, down to as low as $13. That's going to be the target. Resistance all the way up to all-time highs at $17, $18. Palantir's got this very nice higher high and higher low. Resistance all the way up to as much as $80. And support level is going to stay put roughly at $70 with a very strong area of demand in the 60s for Palantir. Coming over to Tesla here, and Tesla continues to be very weak, and there's no doubt about it considering the RSI, the MACD, and we were kind of expecting that anyway, to how much it's moved up, 487, seeing a nice little pullback right now. So precisely from its all-time highs, Tesla is down a little bit over 10 to 11%, which again is very normal considering the entire rally that we've seen for Tesla. So really what the market needs right now is stabilization. It needs to stabilize at these levels, right? Because if it sells off, then we're back to where we started and we've pretty much given back on all the gains. But if the support levels get validated, right? So if the Nasdaq holds up this level here and the S&P 500 kind of validates that support here, then what we get is a little bit of stabilization in the market, right? So sellers need to get exhausted. We need to find some kind of floor, some type of support where the markets can really trade sideways for a little bit before we see the next move. But until that happens, I think there might be some selling pressure on the horizon. And for Tesla, next support inside this green rectangle in the low 400s is where I could actually see it coming down to. I think that would be a very good level for Tesla to find support. Coming over to NVIDIA, and NVIDIA on the day continues to get rejected at this area of resistance. We've talked about this on our Discord and our previous updates as well. And support level is going to stay put right about here in the 117, 120s for NVIDIA. Talking about advanced micro devices, and AMD continues to sell off and coming up to its next support at 116. So this right here is going to be that level to watch for advanced micro devices. Again, very low, downtrending channel of lower highs and lower lows. And again, a lot of area of resistance and supply in the 120s right now for advanced micro devices. Coming over to Meta platforms, and Meta here also selling off as expected. Again, this was the higher high and the higher low. And it's now starting to get rejected at this higher high, and of course selling off down to as low as 540 as the next potential support for Meta. Google also rolling over. Support level is going to stay at 183, resistance all the way up to 196 to as much as the all-time high. It's going to be sitting roughly at $202 for Google. Microsoft also selling off a little bit, coming back down to that inside this green rectangle. Again, sells off further. If it does, that's going to be causing more potential downside for the general market because, again, the market cap weighted stocks here, Microsoft is at the top of the list at over $3 trillion market cap. Coming over to Netflix, and Netflix on the day was one of the few stocks that was actually up over 1.4% on the day. Support level is going to stay up right here, 865. This will be a resistance roughly at $902, $903 per share for Netflix as well. Coming over to PayPal. So PayPal here also selling off. Getting rejected at this area of resistance at 91.5. Support level is going to sit at $84 down to very strong support levels sitting roughly around here at $76, $77 down to as low as inside this green rectangle in the low 70s. But right now we're seeing a lot of consolidation sideways at $91, $92 here. Coming over to Costco, and Costco here breaks down below 961. The next support is going to be $919 to $920. Resistance all the way up here to as much as $961 to as much as $1,000 for Costco. Visa consolidating sideways, resistance all the way up to as much as $321. Support level near term is going to stay put at low 300s for Visa. A lot of consolidation sideways, still within the context of this uptrend, with a little bit of a gap to also fill for Visa. So you got a massive gap here for Visa. And finally, we come over to Enphase, and Enphase here continues to sell off down a little bit over 4%, breaking down below the support of around $69-$70. And the next target is going to be down as low as $58, $59 for Enphase. So that's going to be the 52-week low for Enphase once again. So that's the one to keep in mind. So hope you all enjoyed this video and a complete update on the markets here. Let's get ready for the inflation numbers. And like I said, some very important support levels to keep in mind for the NASDAQ and for the S&P as well. So make sure that you drop a like, subscribe to the channel. Again, if you want to get access to the shopping list, all the different updates on the Money Invest Index, the concentration, all the new features that we're adding on for our website, as well as all the portfolio updates and Discord updates and trade alerts, links going to be down below with that 16% annual discount that's available until the end of this month. So as always, happy investing. I'll see you all in the next video.